Good morning, everybody. It's Christopher from Student Education with the 4 Majors Notice Update for the 8th of February 2013. Hi guys, after yesterday, all that news, I think a lot of us stood aside, and it was quite interesting to see a lot of the news coming out quite positive to start with, but some mixed ones. I mean, the most important ones being the official banks interest rates for sterling and euro yesterday unchanged, and then some other ones, the prelim non-farm production quarter-on-quarter figures for the US market were higher, which was good. Unemployment claims, however, were slightly higher than the forecast. They're expecting 361,000 to claim for unemployment. It came out at 366, so an extra 5,000 claim for unemployment figure. However, what did it do to the market yesterday? Let's have a look at the daily. Quite clearly, you can see that 13,500. We want to see a break of it yesterday. I mentioned that if you wanted to see price continue to the upside, then we needed to see a nice strong bullish engulfing candle on the daily. That failed to materialize. We had this bearish engulfing candle close lower, and at the moment now you can see prices heading towards that 335 mark, which is my fib projection level, 61.8 level to the downside. If you look at my weekly, I did a fib projection from the all-time low here in July of 2012 up to the current highs here through September, down to the consolidation low here in November, and then it projected fib projection levels to the upside. So we want to see price moving 100%. It got thereabouts, and price is now stagnated. It's actually consolidated. Price is now pulled back, and in doing so, trading below the 13,500, which happens to be the institution moving average. But in doing so, it's heading towards that first port of call, the consolidation area here around the 61.8, which happens to be the 335 mark on my daily time frame. So that'll be a good target, trading below the 20 period moving average. Excuse me. Okay, so first port of call 1335, nice tight, very aggressive trade intraday to the downside, and then our 4 hour, that would be to our institution moving average. A lot of consolidation in and around this area. You can clearly see over a period through the first part of January, a lot of consolidation took place on this particular pair at that particular time. So we could see a lot of consolidation as we head into this area here, 13,500. Nice, quick, aggressive trade to the downside. However, look to see consolidation. We would need to see price closing lower than that on the daily to see any further extensions towards our second target, which would be the 13,200 on the near term. So as it stands at the moment now, hourly, you can see prices moving sideways after that move to the downside. Lower swings I mentioned yesterday, the swing highs were getting lower. That dictated negativity, so we should have looked for ultimately a nice breakout. There we go on the hourly candle, nice bearish engulfing candle, and target towards that 1335 as our first target. On to sterling. Let's have a look at the daily. After yesterday's news, we had the total opposite for sterling. You can see price actually after the indecision candle, the doji candle, that came at the underside of that 15,700. I mentioned we'd like to see a nice bearish engulfing candle here yesterday to confirm that price was still looking negative to the downside, and then we could have traded to the downside. However, that failed to materialize. As you can quite clearly see, the actual candle moved higher, and in doing so, closing above that all-important 15,700 mark. And you can see on my 4 hour time frame, closing above it. Not a really great candle. However, you can see the candles preceding that, finding momentum to the upside. So, as long as it trades above 1575, we should expect to see further opportunities for support. So look to see if price can actually maintain these levels above 15,700. If it fails to and gets below, you can see that we're still in a negative trend. The institution moving average is still above price, acting as resistance. And you can see predominantly the histograms on the other side is very red. We are seeing some blue near term. However, for this to be a positive trend, we need to get above at least this 15,800 and the downside trend to actually even contemplate going towards that 5,900, which would be our second target if we ever saw any upside movement. So, 2 clear points here of consolidation. We would need to see at least the 15,800 being broken, and then we could target the upside. So patience here is key yet again on this particular pair, as we are seeing price consolidating now. There's a lot of consolidation now in this downside trend. Hesitation, price is hesitating as we move lower, and due to that, we'll just be very, very aware. Just be aware that we could see potential for price to actually start looking bullish near term. So as I mentioned to you, ideally you want to see 15,800 being broken, and then we'll trade towards the all-important 15,900 mark to the upside as our first target intraday. So look for a nice bullish engulfing candle to confirm that sentiment moving higher, then target 15,800, get above that, look at 15,900. just be aware we're still on the hourly, still trading below the institution moving average. Everything's looking positive, but we're still below the institution, so it's imperative that we get that bullish engulfing candle to tell us where that sentiment lies in this particular pair. US dollar Swiss franc, here again on the daily. We spoke about it yesterday, 910. Price trading below that. We had an indecision candle the day before, a spinning top at the underside. So we had a doji spinning top. All of these are indecision candles. And because it was actually finding resistance at the underside of 910 and we were in a downside trend, we were looking for potentially a bearish engulfing candle. The only other outcome would have been a bullish engulfing candle to tell us that price was looking positive near term. And sure enough, yesterday's market sentiment actually pushing the US dollar higher against the Swiss franc, and in doing so closing above the 910. So what does it mean intraday? You can see that price actually moving higher. However, now you got the institution still above price, so that's still negative. It's still a negative trend, and ideally we need to get above that 922 in order to see price actually moving towards that 930 would happen to be our intraday target, which would be our major. If you can see on the weekly here, because I took the low in August of last year, sorry, 2011 to the high we saw in 2012, and I did a Fib retracement area, and you can see the 23.6 would be our target if price actually finds support at 910. So near term upside is still looking positive at the moment intraday. We do need to see price actually falling through. You can quickly see that our histogram is showing negativity. We have red across the board here, indecision. We only have a sell on 2 of our larger time frames. Intraday is still very uncertain. So very, very important. If we are to see any further extensions to the upside, the institution moving average would need to be broken on our 4-hour time frame. So around about the 92200 mark, get above that, and then we should be targeting the 930. Failure to do so, we could be back into a consolidative range, and if that happens, then we should be looking for consolidation into the new week. US dollar Japanese yen, last pair of the day. Okay, this particular pair trading at all-time high on our weekly time frame, which happens to be the Fib retracement area from our monthly highs to our monthly lows. On this, if you took the chart of the US dollar Japanese yen, the 38.2 now is in play at 9400. Okay, so we should see price actually starting to consolidate at this area. Yeah, there we go. We had 2 doji candles, and then you can see that we are at a resistance. So bearish outcome on the start of things this morning, going through the Asian session, leading into the European session. You can see that price is starting to fall over. So as it stands now, price is heading, so we should be looking for continuation to the downside. So look for nothing more than shorting opportunities intraday. Ideally look towards the institution moving average here near term on this particular pair as we head low on our hourly. So look towards the 9250 mark to start with, and if we can get break below that, then target further lows to the downside. So as it stands now, you take the all-time low on this particular pair. You can see the 23.6 would be that 9250 mark. Get below that towards the 38.2, the 50%, 61, which will take us to these prior consolidation areas around here. So you can see price moving higher. So take on board, look towards this target chart, get below 23.6 today, look to see if we can target the 38.2, the 50, etc. to the downside. So as it stands now, price consolidating on the time frame because we're heading into a major support and resistance level. For this to remain positive going into the new week, we would need to see price trading above 9400 to see any further gains to the upside. Otherwise, what we could see is consolidation, with profit taking being the number one on the agenda for the particular pair. So we could look towards the daily lows here, consolidation roughly as I mentioned towards these 9220 mark, 9230 mark, the consolidation here. Get below that, then we'll target these areas down the bottom here, as I mentioned, towards that 9050 mark, as we saw prior resistance and support through here. That's it for today, guys. Hope you have a fantastic trading day. Just have a look at your news to see if there's anything out there that's going to actually factor in price movement today. We don't have a lot of news out on the European session this morning. We still, remember, have day 2 of the economic summit, however, so that's very important. Otherwise, this afternoon we have the employment change figures for the Canadian market. We also have the trade balance figures and the unemployment rate. So a lot of news out for Canada, and then we have the trade balance figures last at for the US market later this afternoon at just past 1:30 GMT. So going into a new week or into a weekend, we could see consolidation across the board as people start to manage their accounts, their profit taking. So we could see towards the end of today a bit of consolidation before the end of play. So take that all on board, guys. Have a great weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.